This year has been the most difficult year of my career, worse than 08-09, and I would venture to say that it has been the most difficult year of many investors' careers. The only thing that worked this year was energy. It's up almost 50%. And many people are asking us, why don't we diversify into energy since it's working? Well, the reason for that is we think it will stop working. If our forecasts for electric vehicles and autonomous taxi platforms are correct, then oil demand could drop by roughly 30%, 30 million barrels a day during the next 5 to 10 years. And we believe that demand destruction has already started.
Bitcoin is currently down 15% in Q4 and over 60% year to date. BTC USD has few bullish allies as 2023 looms. Struggling to recover from the ongoing FTX scandal and associated fallout, the largest cryptocurrency giving back all the gains since late 2020 is indicative of the crypto market as a whole. Hello and welcome to Money Talks. In today's video, Cathie Wood, CEO of ARK Investment Management, updates about the recession fears and the current market cap of the crypto industry and reaffirms her firm belief in disruptive innovation.
We believe that the leading indicator, correctly, is inflation, and it has peaked. The inflation rate has peaked. Almost every measure of inflation has peaked. Most of those metrics peaking out in March or June of this year, in the first or the second quarter. So typically, that's a good thing for innovation. But as I just mentioned, I think the market is so skittish and has been so terrorized by the most rapid increase in interest rates ever. We have never seen an 18-fold increase in interest rates within 1 year. It has truly terrorized the markets. And I think that the fear is palpable. In fact, I think according to the Bank of America recent surveys of fund managers and advisors, it's probably the advisors, we haven't seen this amount of cash on the sidelines since I think it was 2006, maybe even 2001. I do know also the same survey shows that the put to call ratio in the US market, meaning those short relative to those long put calls, is at 1.5 now, and it has not been that high since 2001. So we have an incredible amount of fear in the market, and that actually is the best time to average into these markets. I remember in late 20, early 21, we could do no wrong. Anything we said was gospel at the time, and I knew that wasn't right. And at the time, I remember saying, keep some powder dry. It is for these moments, or averaging down throughout a period like this, that one keeps the powder dry.
Although the world's largest cryptocurrency by market value, Bitcoin, saw a roughly 64% decline in value year to date, CoinDesk research shows that Bitcoin and Ether returns in 2022 per unit of risk were about the same as equities and significantly better than bonds. Bitcoin and Ether appeared to be affected by the same forces that made stock investing a challenge over the past year, including high inflation and the looming threat of a recession. According to CoinDesk data, stocks were nearly twice as risky in 2022 as 2021.
This period seems to be the flip side of the late 90s. The late 90s was an irrational increase in tech stocks, appreciation in tech stocks. And it was incorrect. The technologies were not ready, and even if they were close to being ready, the costs were way too high. So technology's not ready. We didn't get the cloud till 2006. We didn't get the big breakthrough in AI, deep learning, until 2012. The cost for DNA sequencing, $2.7 billion for one genome back in 2003. That number is down to $500 now. We are ready for prime time, and yet investors are doing the opposite of what they did during the late 90s. They're running away, running for the hills, running for their benchmarks, and we think that innovation is going to pose a problem for the benchmarks. So you bet we think innovation is going to work. We think it's going to work in a big way. We are ready for prime time for these 5 innovation platforms.
It's no secret that 2022 has been a difficult year for global markets. The U.S. stock market has fallen over 15% in value, bond markets have fallen over 20%, and crypto markets have fallen over 50% from their peak in 2021. Early in 2022, central banks around the world began to raise interest rates in order to slow inflation and decrease the rate of economic expansion. The tightening of monetary and fiscal policies has dramatically decreased investors' appetite for risk and speculative investment strategies. Many investors have opted to sell or exit speculative asset classes altogether. This macroeconomic pressure has affected traditional asset classes and has put tremendous pressure on emerging asset classes, including cryptocurrency.
Why do we not turn defensive like most managers are doing? Well, there's a very important explanation for that. We do one thing. We do not pretend to be an asset allocator. We are our research and our investments are centered on disruptive innovation. And so when advisors and individuals choose our strategy, they're not choosing it alone. They have more diversified portfolios, of course, including real estate. The biggest asset most consumers have is housing. So we are one part of an investment portfolio, and therefore we would never be using cash. We would expect advisors and individuals to basically raise cash and segregate it from their investment portfolios. In terms of our strategies, we, during downturns, concentrate towards our highest conviction names. And so we have been doing that now for nearly 2 years. And the history would suggest that concentration strategy plays out very well in the subsequent rebounds. And we do think this rebound will be quite powerful. This year has been the most difficult year of my career, worse than 08-09, and I would venture to say that it has been the most difficult year of many investors' careers. The only thing that worked this year was energy. It's up almost 50%. And many people are asking us, why don't we diversify into energy since it's working? Well, the reason for that is we think it will stop working. If our forecasts for electric vehicles and autonomous taxi platforms are correct, then oil demand could drop by roughly 30%, 30 million barrels a day during the next 5 to 10 years. And we believe that demand destruction has already started.
As we move into 2023, investors should be aware that the current macro environment, lack of regulation and confidence in crypto, and unclear regulatory frameworks will continue to put pressure on crypto. While these issues are significant and will not be easy to overcome, blockchain innovation and progress is continuing to grow, and the use cases for the technology are continuing to be adopted. It is important for all investors to review their crypto portfolios, their investment thesis behind crypto allocations, and set a plan for proper crypto investment moving forward.
We believe that now is a once-in-a-century investment opportunity. Well, a couple of reasons. Innovation solves problems, and we have a lot more problems now, even more than during COVID. We have corporations now experiencing margin pressure. And we have individuals, consumers, perhaps worrying about their jobs. And when we get into a period like this, businesses and consumers are willing to change the way they do things. And they embrace innovative solutions to their problems. Now, this once in a century is not an understatement. We have not seen more innovation platforms evolve at the same time ever. The closest is about 100 years ago: telephone, electricity, and automobile. Interestingly, back then, we were just getting over a pandemic, the Spanish flu, and over a war, World War I. And at the same time, we were experiencing incredible innovation. And so very similar dynamics. And what happened? Inflation peaked in June of 1920 at 24%. And within 1 year, it was minus 15%. We think we're going to experience a mini version of that during the next year. And then what happened? We launched into the roaring 20s when the stock market had, I believe it was a compound annual rate of returns of 25% for the next 8 years. The roaring 20s, we think we have a setup here for the roaring 20s, and it is all around innovation. It is darkest before the dawn, and the best time to invest, according to Warren Buffett and the great investors of our time and of all time, is when there is so-called blood in the street. It's a crude saying, but it means when markets are deeply into bear territory.
So, do you think it is a good time to invest in crypto? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.